Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Well, everyone, checking in on some of our laggard sectors. So back at the end of April and early May, we had a scenario setting up where we were watching these sectors who clearly had bounced less than the vast majority of the other sectors, the tech sector, financial sector. And we were saying, okay, if the S&P 500 stays strong, watch for these tight ranges to break bullish. If the S&P 500 sees weakness, these names are not positioned well whatsoever to absorb that weakness, and they're going to be lead bears. So we had a scenario where these laggard sectors, all in unison, moved for a 3-day period or so at the same time. And jets went from 13 to upper 15s, and we have the cruises. They made a 30% bounce in a few days, 30 to 40%. The MJ sector, they all did the same thing at the same time. That move was very short-lived. That was the last little energy on the bounce, and as soon as that top was hit, they have now gone right back to being the weakest sectors, leading the way to the downside, especially with the S&P 500 seeing weakness the last 2 days. So we look at Jets here. Jets had a nice equilibrium, tightening up, higher low at 1306, lower high at 1585. We pulled back, and since then, it's just been a daily lower high every single bounce. 1585, 1391, 1364, bear break today, a little bit of increasing bear volume, and the only supports, we broke 1195 today. That's leaving 1125 as the only support. So we are currently maybe 7 or 8% from dropping to a lower low. SPY is 21% from a lower low. Our weakest major sector, the financial sector, is 15% from a lower low. So the airline sector is the weakest, and it is closer to a bear break than the vast majority of other sectors. So if this market weakness were to keep up, we're going to look for bears to keep complete control of the airliners. Next time we bounce, anything under 1343 is just a daily lower high, and all of these names that we're about to look at have a bear lean with daily downtrends. CCL, so we've gotten a whole bunch of news recently out of these cruise liners, and none of it really good. There's our pop, big bull move. I was day trading CCL on the way up and on the way down, both directions. Now we have a lower high and lower low. The most important support from here, 1137 and 1095. But next time we bounce, anything under 1439 is just a lower high. That's over 10% from where we stand. That's over 15% from where we stand. So you know there are bears that are just going to be waiting for daily lower highs for re-entry. So just a very rough trade example. Let's say we start a bounce from here, and this is our temporary bottom. Let's say I make one bearish entry at $13, and I have another bearish entry at $13.80, and my stop goes over $14.39. That's a very wide amount of risk in terms of percentage on the trade, so my position size would have to reflect that. But scaling in to look for a daily lower high, looking for weakness, is the way to be playing this sector, or these sectors, in my opinion. RCL is the same thing, lower high, lower low. We'll have to see what kind of earnings reaction we get. I believe that was after hours. Not sure about earnings, double check on that. Either way, bear break on the daily, lower high and lower low. We're now looking down at 3301 as the next major support level. And again, these weekly time frames are weak. Look at where we came from. Look at the size of the bounce. Fib traders will be looking at the retracements, and the percentage retracements on these bounces is way less. Yes, percentage-wise, these bounces were big. We saw 150% bounce. That's a big bounce. But considering where we came from, it's not a big bounce. So MJ sector, CGC, really tight, awesome bull break, gave it all back. Lower high, lower low, increasing bear volume, back to a bit of free fall. 1288 is the next support, and we're looking for a weekly higher low compared to $9 to be the most likely scenario, as that's still significantly far away. But Bears are back in full control, and next time we bounce, we're just going to be looking for a daily lower high. H, hotels. Same thing. Little bull break, end of April. Gave it all back. Lower high, lower low. Closes at the low of the day. 5 of the last 7 days showing us momentum. And we're now looking down. There's a gap to fill at 40.89. 36.12 is the most important support from here. What's the most likely scenario? In my opinion, I would expect to hold the low at least initially. Because again, that low is a 40% plus drop from where we stand right now. But we know on any bounces, anything under 53.47, just a daily lower high. So bears, if not already in positions, patiently watching for daily lower highs. It's the kind of trade where you just stick it on your back burner, maybe write down a trade idea on your desk, check in on it every day, but make that trade come to you. If it doesn't come to you, you go on to the next trade and you never trade these names. But it's something I'm watching for. The next time these cruises bounce, I'm going to be watching for the potential of a bearish swing entry for that daily lower high. And last we got BA. BA is interesting. So BA has this line in the sand support 120, 123s, 121s. We broke it today to 119, but we closed at 121.50. So we keep seeing these bear breaks without significant follow through. So we're not seeing bears get much follow through. The bulls aren't doing anything. The daily lower highs are very clear, keeping the bears in control. This is the kind of setup that I keep an eye out for bulls. And I'm being very picky because looking bullish on this name is obviously against momentum. So I need bulls to prove it to me on longer term time frames. Next time we bounce, if it does not break 135.55, it doesn't mean anything to me, and that's over 10% away. But I'm watching for a potential shift in momentum because these bear breaks are not getting notable follow through. It's the same psychology of what a falling wedge is. Can't really draw a good falling wedge on that daily time frame, but same mindset. And we're going to be watching for the potential of these lower lows not leading to bear follow through, to be watching for that to give us a weekly higher low. Anything above $89 is a weekly higher low. So we can pull back 25% and still be holding that support. So just something, again, putting it on my back burner. Odds that I trade BA bullish this summer, probably 15%. But it's just a trade idea that I'm watching for, and if I get an ideal setup where the risk is worth the reward and I like the entry and I've got a clear stop, then I'll take that trade, but probably won't. It's just something I keep an eye on. There's so many trades that I watch for that I end up passing on because the trade does not come to me, and this would be an example of one of those. We'll see if it comes to me, but as of right now, it is not. So that's where we stand. Again, keep an eye on these sectors because bounces are meant for shorting as long as we are extremely weak. And if you're weak the overall S&P 500 as a whole, that only adds confidence to the weakness in these sectors. Certainly have to be paying attention to news with a lot of these sectors, but they're weak. Have a good day.
Legs getting better, back to flying. Things are looking up. She's got a cut on her chin, I'm just noticing for the first time. She was in a battle. Rhododendron bush popping off. At the peak there, that's got to be 15 feet high. Rhododendron's poisonous if you burn it and breathe it in, and it's poisonous for goats to eat. But it's a good bush.